And when you do use cash, you don't have the same ability to understand your cash flow. Like accrual is so much easier to understand. Hey everyone, this is Norm Farrar, aka the Beard Guy here, and welcome to another Lunch with Norm, the e-commerce and Amazon FBA podcast. Today, we're going to be discussing making more profit, improving cash flow by leveraging your financial data. We're going to be talking about how you can forecast inventory using both inventory demand and cash flow. What are good product profit margins and refund benchmarks, and how can you use AI in your financial data to spot bad trends? All right, everybody, welcome to another Lunch with Norm, the e-commerce and Amazon FBA podcast. Okay, like I mentioned today, making more profit and improving cash flow by leveraging your financial data. Our guest, first-time guest, is a 7-year Amazon veteran who sold hundreds of thousands of dollars, primarily in the home improvement niche. He recently started a bookkeeping software and service company called Sell Analytics to scratch his own pain points as a seller. We'll be introducing our guest, Ryan Hurley, right after we talk to a sponsor. Facing cash flow challenges with your e-commerce business? Discover Viably, your ultimate financial ally. From real-time sales data integrations to immediate funding access, Viably is here to support you. Plan your growth with their free tool for online sellers and engage with specialists whenever you need. Extend your cash flow with Viably. Let me see. We can sit back, we can relax, grab a cup of coffee, enjoy the show, and welcome Ryan.
Hi, Norm. Thanks for having me.
Good. How's it going?
Pretty good. How about you?
Oh, pretty good after I have my coffee or two.
Yep.
So I just found out that you're in Cleveland, just across the lake.
That's correct.
Are you having good weather or bad weather?
It's pretty nice. I was recently in Colorado snowboarding, which was cooler, and now it's nice 60s here. So getting the extremes.
Yeah, I was just saying that because we're north of you and we're getting some pretty nice weather right now.
It's surprising. Yep.
Yeah. So let's get into this. So you've got an app that you created to help you out with a problem. And why don't we just get into it? What were some of the problems you were having and what made you build this app?
Yeah. So I've been selling on Amazon for 7 years. And over that time, and even outside Amazon, I'm a big data guy. And I was frustrated with the lack of kind of data analysis in one tool. So for me, I was doing accounting in one tool. I was using QuickBooks, and that was very helpful to get kind of my complete financial picture, all my Amazon, my insurance, contractors. But that data from Amazon would not natively sync. So I'd need like a integration tool like A2X or WebGility. And that was okay for a while. But then I realized that I was missing out on a lot of e-commerce specific data. So kind of like Seller Board, I wanted to know, well, what's my profit per product line, per SKU, and kind of some inventory metrics. And so I was paying for QuickBooks, I was paying for A2X, and I was paying for Seller Board. And I was like, this is all kind of related financial data. Why do I have all these systems paying all this money? And could there be a better method?
Yeah, that's interesting. You've incorporated all of that. Is it also an accounting program?
Yeah, so I created a complete double ledger accounting software that kind of replaces QuickBooks entirely, directly integrates with Amazon, and has the e-commerce specific analysis of Seller Board all in one.
That's I did not know that. I didn't think you had the QuickBooks component. And by the way, if you hear that in the background, that's just Alexa talking to me. I guess they wants me to buy QuickBooks. I better not even say that B-Y or B-U-Y word.
Yes. No.
So, okay. So let's talk about the accounting. Why is accounting important, and what are the two main methods of doing it? Just to touch on it for those beginners who don't know the two main accepted principles of accounting. What are they?
Yeah, just backing up, kind of why do accounting? And I think there's really two reasons. It's compliance and managerial purposes. So we all know we need to pay taxes once a year minimum. If you're making money, it's probably quarterly. And relying on something like Seller Board or just a profit analytics tool that doesn't have all your income expenses that you can actually deduct. So you need some sort of system, whether it's QuickBooks, Excel, paper receipts, a checklist to kind of keep track of your numbers to actually pay taxes. And that's required for everyone. But especially now with all these fees, the inbound placement fee, managerial accounting and understanding your numbers kind of proactively to look at how's the health of your business, how much money do you have in your bank account, and actually what are the profit margins of those individual products. Doing it managerially is critical now.
Mm-hmm.
Yeah.
Yeah, very much so. So I'm curious about these two methods,
Mhm.
and I see accounting firms that have approached us before talk about using cash, and we use accrual.
Mhm.
We always use accrual, and we highly recommend. I'm not an accountant, but in Amazon, I have I don't know why anybody would use cash. Is this correct, or am I missing out on something?
Yeah, simplicity is the main reason that at first, like for me and other sellers, if you're doing less than $20,000 a year, you're probably fine just to keep an Excel spreadsheet and keep track of your expenses. But like you said, cash and accrual is the main difference, and that's really when you recognize revenue and expenses. So what that looks like, especially for an e-commerce business with inventory, that's taking when you purchase it using cash, you'd expense it as an expense right away. So say you purchase $12,000 of inventory January 1st, cash you'd say expense January 1st, and all the rest of the year it you'd have zero inventory expense. That doesn't really give you a true picture if you sell that all through the year. Whereas accrual, you'd put that as an inventory asset, and every month, if you sell, say $1,000, you'd expense it throughout the year. So you end up getting the total same value at the end of the year, but with that managerial purposes and really needing to know your profit margins using cash, although it's easier, you just don't get that real time data.
Right. So I'm kind of curious about anybody who's listening right now with their accounting. Are they using accrual
Mhm.
or are they using cash? And if so, why? Maybe you don't know the difference. Maybe you're just going off of what your bookkeeper accountant are telling you. One of the things, Ryan, that I've always found, and when you do use cash, you don't have the same ability to understand your cash flow.
Hmm.
Like accrual is so much easier to understand. Would you agree with that, or what are your thoughts?
Yeah, I would say accrual is much easier to understand your profitability, but for cash flow, in a way, cash can be easy to understand that it's money in, money out, which is why kind of you need to use some sort of a system that can does your accounting in accrual, but also you got to keep track of when cash does change hands so that you can actually say how much money do I have in the bank.
A lot of the times, if I'm at an event and we say this a lot on the podcast, almost too many times. People are going to roll when I say this. Know your numbers.
Yes.
You know, what are the numbers people should know?
Yeah. In the past, saying I'm a seven-figure seller, six-figure seller, eight-figure seller, that's super cool. But nowadays, that's the top line revenue number. Nowadays, there's tons of sellers who I would rather be a six-figure seller making good margins
Hmm.
than some seller, seven and eight-figure sellers losing money working 80 hours a week. So understanding the big numbers, top line revenue, gross profit, which is revenue minus your inventory expenses, and breaking out advertising, that's important too, because that's total advertising cost of sale, as well as net profit after everything. That's really, net profit is kind of the main number that I look at these days.
Yeah, I used to love it. You go to the shows and you'd hear these guys on stage.
Mm-hmm.
Oh, I'm a seven figure. I'm an 8-figure seller.
Mm-hmm.
That's all good, but what's your bottom line?
Yeah, how
You
much you
know,
keeping?
like who the hell cares? And everybody's woo standing up and
Yep.
cheering. Well, what the hell? I never got that. I never understood that. I guess it sounds good.
Yeah, it does sound good. So it's definitely.
So, so let's talk a little bit about, and I know we're kind of skipping all over here. So if you want to back
No
up,
problem.
if I go too far down one rabbit hole, let's just back it up. But there's so much to discuss,
Mm-hmm.
and one of the things that I like to talk about are routines. I have a very specific routine in the morning
Mm-hmm.
that I have for my bookkeeper. So I'm anal when it comes to bookkeeping, and I want every receipt
Mm-hmm.
updated and uploaded into QuickBooks. So if I ever have an audit that comes my way, I
Yep.
have the invoice, I have the receipt from wherever. Let's say it's PayPal, they're attached. Anything that I do, I want to have it recorded, and just properly put into not only QuickBooks, but all of our statements into proper files. So we just have financial statements and receipts. By the way, they're also there. That's how anal I am. But
Nice.
but they're all in a system
Mm-hmm.
where my bookkeeper can access it, my accountant can access it during year end, or if we're doing any type of reviews. So let's talk about routine and what can people do to start getting into a healthy financial routine.
Yeah, I like that routine you have. It sounds like a really good one. I think I think it's important to kind of think about what does the IRS want from us in terms of the compliance side, and that's really two things. It's knowing your numbers, how much did you make, and that's in the accounting system, but also having the documentation to back it up if an audit comes. So having the numbers in a system, but also like you mentioned, that receipts, invoices, bank statements, that's also very critical. And I remember when I started 7 years ago, it was I knew a lot of people who did their accounting once a year come tax time. And it seemed with Amazon fees staying pretty flat, it worked that if my profit margins were good in January, they were probably going to be the same, if not better in December. But nowadays with inbound placement fees, I don't know what, I think there's something coming next month and all these other ones. If you're not doing it at least monthly, preferably every 2 weeks, and that's categorizing your transactions in your bank, that's inputting your Amazon or other sales channels data into some system, whether it's QuickBooks, Zero, or Excel. So doing that at least monthly, preferably more, I think that's kind of the minimum that people should be inputting their data. And for our tool, I think like you, having close to real time as soon as something happens is very important, which is kind of like we created a system where you can text us as because we're doing bookkeeping for you. We have the software plus a service. You
Mhm.
text us a image of your receipt and it gets inputted right away for really fast. So that's on the inputting data side.
Yeah, very good. I just wanted to. This is how crazy some of this stuff is. So, if any of the listeners, if you've not gone through an audit, um, j- prep is everything.
Mm-hmm.
You're going to have a period of time where it's either going to make your life a living hell
Mm-hmm.
for a lot of us. And my old partner, I love this. He was the opposite. Like it was Felix and what was the other guy? Oscar, the odd couple. I'd have all my stuff in, done up to a T. So I was like Felix,
Mm-hmm.
and he would literally come in to our accountants with a shoebox
Yep.
and go, I'm not kidding. Like he'd have a shoebox.
Yeah.
And Dave, if you're listening, I love you. But it would crack me up
Mm-hmm.
that our accountant would, okay, here's Norm's. It'll be done in like, a couple hours. Here's Dave's. Oh, it'll take us a week to figure this stuff out. And he paid for it, right? But it was just two different ways of doing things. But when you're talking about any tax agency, government agency, here in Canada or down in the States. I know in Canada, just to give you a couple of different things or different ways that they can come at you for information. In Canada, we have to book our events into our, let's say, Google Calendar.
Mm-hmm.
So one of the things that they'll look at is, okay, you're saying you went on this business trip. You've got this air travel, hotel, meals, whatever that is. Where is it? It's not in your calendar.
Wow.
And was it business? Was it personal? When you're putting receipts together, who were you dining with? What was the business exposure? What were you talking about? Important. I guess I'm talking more Canadian. I think it's very similar in the States, but no write-off if you're just sitting there with your kids talking, unless it's Kelsey, then I could talk a little bit of business. Another thing that I was told is to keep the tags. So if you have a lanyard, just keep that and file it for 7 years until, we can toss the books. So it was so important about keeping this information. Another one is just travel in general. Mm-hmm. So I've told this on the podcast before, but if you're using a business credit card, and you're getting points on your business credit card and you decide to go to Disney World with your family, that's a huge no-no. Mm-hmm. And a lot of people don't realize that, but a buddy of mine, and this is a story I always tell, he took his family, I don't know where they went on vacation, but the IRS came in and hit him up for a $40,000 penalty. Wow. Because he used business points. Mm-hmm. Instead of business for personal. So these are just some things that are crazy when you first hear about them. And one other thing, if you're not sure, if you've got this weird feeling that you're not doing something right. So example, in Canada, if we have contractors that we are working with 40 hours a week, they could be deemed as an employee. And it could be just if you put them into a file on your Google Drive called employee.
Wow.
You have to separate it out as contractor. And if not, you're going to pay all the back taxes for that person. So these are things that you could talk to the IRS about or Canada Revenue and get a judgment on it and just put it on file. And I don't think people do that enough. But if you have that gut check and it's saying, I'm not sure, it's probably wrong.
Yeah, that's a great story. Yeah, I worked 2 years under an accounting firm, and I had my fair share of people bringing in, it was mainly Ziploc gallon bags of receipts. So it was not fun to transcribe it. And the accountant there, he kind of instilled to me the habit, if you are doing something for business with other people, especially business meals, take the receipt and have everyone sign their name on it. That's kind of another little thing too. Just the date, location, who was there, and what was the purpose. That's a way to kind of validate it that the IRS is going to want that if you are audited.
Yeah, and I've got a routine, again, going back to that, where I have an iPhone. I just scan the document and just send it to my bookkeeper. I don't have like a year and a half of these. It's just as it comes in, boom, done.
Yep.
One other thing before we get into the different types of financial reports, but I have this system of filing, and it's just filing by mayhem. And I don't know if you've ever heard about this, but this is really good for receipts and anything you're doing with accounting as well. But it's called the Paper Tiger. Have you ever heard of it?
No.
Paper Tiger, a buddy of mine told me about this, and this is as a I don't have a piece of paper around anymore, but as a piece of paper comes in, you file it as it comes in, not in alphabetical order, but just as it comes in. And under what category? It could be under personal, reference, mostly business. And it's like a Google index. So you just go in and you'll never lose a piece of paper ever.
Wow.
It is so cool. If you've never checked it out, it's called The Paper Tiger. I've got no affiliate code or anything like that, but for the paper side of things, you can do that even when you're doing digital. So they have a digital version for Google Drive as well. Highly recommend checking it out. It'll make your life so much easier, especially if filing is not your thing. So let's see.
Is that a physical product or is it more of like the system?
It's the system.
Hmm.
Yeah, and it's not expensive. I don't remember them ever raising their prices in the last 10, 15 years. I think it's $75 for the year. I think that's what it is. But it's just a very inexpensive way to have accurate files. I've gone back and I've said, oh, I got a warranty from some company I needed. I bought some furniture and I had a warranty that I need. It was years ago. Where did I put it? Oh, there it is. There's the file. Boom,
Helps.
got
Yep.
it. Yeah, never lose a piece of paper. It's so great.
I like that.
Okay, so let's see. Why don't we talk about this? Because I'll go on to a sponsor first and we'll talk about the Wheel of Kelsey because I got a ton of other stuff. It's going to take way more than 5 minutes to go through. So at the bottom of the hour, so the first time you're listening, we have something called the Wheel of Kelsey. And that's where our guests give away something for our listening audience. You have to be live to get it. Today, if you want to join us at the end of the podcast and enter the Wheel of Kelsey, it's hashtag Wheel of Kelsey. Tag 2 people, you'll get a second entry. And Ryan, what do we have today?
We're giving away 3 entries that you can get if you use our software, 3 months of free importing, where we'll take your Amazon data as well as actually do the bookkeeping for those 3 months for free. And with that, if you don't want to use us, we'll also do a profit and loss analysis for you. And I think we're going to talk about that later, that it can tell a really big story about your company and kind of where you need to improve.
Yeah, very good. Okay, so if you're interested, well, there we go. Steve's already interested. Hashtag Wheel of Kelsey, tag 2 people, you'll get a second entry. All right, Kels, let's do a live read on Seller Basics. All right. This is for Seller Basics. Hey, Amazon sellers ever faced with account suspensions, ASIN hiccups, or IP headaches? Introducing Seller Basics, your Amazon accounts guardian, which is $99 a month, or code norm, $89 a month. Seller Basics offers a dedicated team to shield your business from these challenges. Plus, this membership offers free legal consultations from seasoned e-commerce attorneys, no long-term contracts, and you can cancel with just a month's notice. View Seller Basics as your Amazon account's health plan. Check Seller Basics out at sellerbasics.com. And now for the disclaimer. Seller Basics isn't an insurer or law firm. Consultations come from independent firms and results may vary. Membership is needed before events leading to the claim. And finally, terms apply. That's it. Okay, Kels, we're back. That was quick. Now let's get into some more questions about financial records. So let's talk going back to the financial health, and let's just talk about the financial review, the balance sheet, inventory forecast, just items like this.
Yeah, I think especially on every couple of weeks or at least monthly, there's really 3 reports you should be looking at.
Yep.
And I think the first one is the profit and loss statement that, like we talked about, what's your total revenue, all your expenses, and what are you actually keeping? Because that's really what matters these days. So looking at both vertically. So like you want to be looking at what are your percent of income. So like if your advertising percent is high or low, and you want to analyze that. So that's a vertical analysis. And you also want to do horizontal analysis, which is kind of looking back. So if your income is way higher or less than your previous month. So kind of compare last month versus this, last year's month versus this, or previous quarters. So income statement is really kind of the first one for the big company health.
Okay. Yep. So the income statement. Are there I guess I should want to focus also on the cash flow statement.
Mm.
I think so many people overlook the cash flow statement. You've got your P&L, your balance sheet, and then your cash flow statement a lot of the times never even gets looked at. Why is that so important?
Inventory is critical for our business, and if you don't have the money to pay your suppliers, you're going to be out of luck. And especially with my business is pretty seasonal, Q4 heavy. If you're struggling with cash in the summer and it comes July, August, and you don't have money to pay your suppliers for a big Q4 inventory rush, you need to really plan ahead, and otherwise you're going to struggle. So really knowing your numbers on the profit level, but also cash. I mean, as they say, revenue is vanity, profit is sanity, but cash is king.
Right. And if you're not looking at that cash flow statement, you really don't know. You might be having just a stellar month and you're looking at this cash going, wow, I'm going to eat steak tonight, when really you're in a really bad position if you're not looking or monitoring your cash flow. Because like you said, just you might have a home run product or a seasonal product and you're screwed when it comes to reordering because you're doing such a great job selling and you just don't have the funds.
Yeah. And with accrual too, by the nature of it, if you just had a huge order for inventory, you could have a really profitable next month and your profit and loss statement could be good, but you just spent all this money on inventory. So your balance sheet's really inflated. Your profit is good, but on a total level, your cash last month went out the window. So you need to really know, if you have another order coming up, how much money do you have and how much actually came in the bank?
Yeah, that's very important. And also, let's just go back to these healthy financial routines again. I know I'm kind of bouncing all over, but we've talked about the income statement or profit and loss, balance sheet, cash flow. I think we still need to talk about the inventory forecast. So, accurate inventory forecasts. How do you achieve that?
Yeah, and one other report too, I think. So there's the profit and loss, and then my other favorite one is a product, individual product level profit statement. So that's kind of like a seller board type tool to say, hey, is this profit, is this product, what are the Amazon fees, what are the individual costs of goods sold, how much are you spending on advertising? So that's the one I'd look at before that. But then for inventory forecasting, that's also critical, that we're in the age where supply chain is critical. And we're fortunate that it's a little more predictable now than in the heat of COVID.
Mm.
So still prices on containers seem to be rising again, but you should have some method, whether it's Excel spreadsheets or a program like SoStocked or a program like ours, to look at your past inventory sales, your recent sales, as well as your sales on other years or kind of an account level seasonality, and figure out when do you need to reorder to stay in stock.
Without using an app, is there a manual way that sellers can do an accurate forecast?
Yeah. And I was cheap too, because I was using QuickBooks, A2X, and Sellerboard, and I didn't want to pay for SoStocked as well. It's a great tool. I've used it. So I had this massive Excel sheet that had these complex formulas to predict seasonality. So it doesn't need to be that complex, but I had a virtual assistant. Every week they'd enter sales by product. And so I had inventory minus sales, and I could do some running totals to kind of figure out when am I going to run out. And if I apply a little bit of growth on there, if I apply some seasonality, what's the date I'm going to run out of stock? And then how can I back out of that to say, my supplier takes 60 days, I got to place my order before then.
I know you're a data guy, and I'm just kind of wondering about this, just because we're talking about forecasting inventory.
Mm-hmm.
Is there a formula in Excel that can help with trends, like seasonal products?
I'm trying to think. Excel has some models that you can use.
Hmm.
It's more than just a formula that you can kind of plug in your X values, like a time series analysis, and they can help you do some actual seasonal forecasting.
I guess you can use ChatGPT to punch in your numbers and try to figure that out nowadays.
Yeah. Yeah. One other thing that I like too is, imagine you have a product, and if you're seasonal, you want to forecast your seasonality. What you can do is try and normalize your values. And so what that looks like, if you have a basic amount of coefficients, and maybe could I share my screen to
Yeah,
show something real
absolutely.
quick?
Sure.
Want to get into the numbers, but want to make sure you guys can understand. So this is our tool, Cell Analytics, and this is kind of a forecasting tab. Here's kind of amount of some seasonal coefficients. So this is how you could hypothetically do it yourself. So these are kind of what our default coefficients are, meaning on average, May and June, we consider that about regular sales. I don't know. What do you experience, Norm, for normal 1x sales?
For explain that again.
We normally see December as like 1.75 the normal sales that is in May or June.
Yep.
So that's how we can do some seasonal
Oh,
forecasting.
okay. All right. Sorry, I was trying to look at the screen while you were talking.
Yeah,
My
sorry.
I'm blind as a bat.
Yeah.
But yeah, 1.75. I know some of the products that we represent are much higher than that.
Mhm.
But yeah, that's fair.
Yeah, so you can change this, and we have
Hmm.
recommendations too. But if you have your own product, you can have your own coefficients. And what you do is you divide total sales by month divided by a coefficient, and you can average that out, and that'll tell you what your normalized value is. So if you had $2,000, say 2,000 units in December,
Hmm.
but only 1,000 units in June, then your normalized value is about 1,000 units. And you can then multiply for the next months. You can kind of do a V lookup. January is normalized times the coefficient of January, and February is normalized times the coefficient of February. So that's how I was doing it manually.
Got it. All right. Okay, so let's go back to forecasting industry, forecasting inventory, and just again, we're on this right now, but forecasting inventory demand and cash flow. So we're touching on it right now, but how does that affect cash flow?
Orders, I mean, especially Q4 is, as we've said, is really critical. And it's another reason why I created this software, is that there's great inventory management programs out there, and there's great accounting programs like QuickBooks or SoStocked, but there's nothing that brings it together.
Hmm.
So I wanted to create a method that can forecast your inventory, but also knows how much money do you have in the bank account. Because it's great to say for Q4 you need to order $10,000 in July, but if you don't have that much money in the bank account, that forecast isn't going to help you. And so, kind of having all the financial data and all the sales data, we can actually make kind of a forecast that combines your sales velocity to stay in stock with actually saying, well, maybe we should split this order up into two smaller ones, or figure out another path to do a series of small orders that stay in stock. We have the cash for it.
So I'm curious about your company. So you're showing us this split screen, and your company's not just an app. And if people aren't listening, and right now, I haven't used your app. I think I'm curious about it because the component that you also have is real bookkeepers.
Mhm.
So it's just not an app. You're not throwing it up. It's not QuickBooks. You've actually got somebody that will be on your account, adding your receipts and your and doing your bookkeeping for you.
Correct. And when I started this company, I was thinking it was just going to be a software app like QuickBooks where
Yeah.
users sign up. But from talking to sellers, there are some methods, there are some things that I do differently in this software that I think are better, but require training. And I realized that sellers don't want to do accounting, or they don't know how to do it right. And it's usually a good investment for them to pay for someone. And not even that much to actually get it right and use it correctly.
Can we go over a little bit about that?
Yeah.
So let's say I'm coming to you with a mid-size account.
Mm-hmm.
I don't know. I'm just going to make up a number here. Maybe 3,000 orders, 3,000 orders a month. So it's, 30 orders or 300 orders a day. Or what am I saying? 300 orders, 100 orders a day.
Yes.
What type of pricing? What type of pricing would you charge?
Yeah, so we charge based on 3 metrics.
Yeah.
One is orders on Amazon.
Yeah.
The second is number of bank and credit card accounts.
Okay.
And the third is if you're on other sales channels like Shopify, WooCommerce.
Okay.
And we don't natively connect to those channels yet, but we can help import it manually. And our starting price is $75 a month, I think, for under 300 orders and 2 credit cards. So like that 3,000 unit, say you had 3 or 4 credit cards, would probably be around $180 a month.
It's reasonable, very reasonable.
Yeah, very, especially now that we're a new company, about 1.5 years old. We're trying to gain market share. So for the complete software and the actual bookkeeping package, I think we're one of the lowest in the market right now.
I just know what I pay for my bookkeeping, and it's offshore, by the way. And yours are U.S. based bookkeepers?
So we have some US based and some Filipino based.
Okay.
Like an account manager that you talk to.
If you need to talk to somebody, are they available?
Yeah. So one of the other things we offer is a monthly 30-minute call, which right now it's mostly with me or just ramping up another US kind of person who, what we do is we kind of walk over those financial statements to really help them. That I've seen a lot of profit and loss statements, a lot of balance sheets. So we do a monthly call to go over that.
Okay. Do they do it? Like, let's say you need to send out invoices or anything like that. Would they do that? Or is it just strictly recording, just data,
Bookkeeping.
data entry? Yeah.
Yep, data entry. Yeah, we've done a little bit for some people. We don't have as clear of a process, but if it makes sense, we can help you out with that. Like if it's just sending an invoice to a supplier, is that what you're saying?
Yeah.
Yeah, that's actually built into our software. You can email suppliers the invoice right there.
Okay. Now, if anybody has any questions about this, I know, just typical, we're going down different rabbit holes, but if anybody has any questions about this, it is very unique. I just, as we've been going back and forth, I've been looking at the website and kind of, I'm pretty impressed with what you're offering. But if anybody does have a question about bookkeeping, throw it in there. Ryan's here. He can answer these questions. Also, the prize today is fantastic. So you'll be able to get 3 months of this service for free. And all you need to do is hashtag Wheel of Kelsey, tag 2 people, and you'll grab an entry. And that's going to be coming up in just a few minutes. Also, if you do have any questions, get them over here now. I've got a couple more for Ryan, and then we'll start into the listener questions. Okay, profit margins, refund benchmarks. How can these improve your metrics?
Yeah, and I'm going to share my screen here. Let's see. So I put together a kind of what I think of as an ideal profit and loss. Are you able to, is it zoomed enough? Can you see this?
Yep, I can see it.
All right. So this is kind of, imagine you make $100,000 a year. This is percentages of kind of the main categories that I think sellers should be shooting for. So I was going to can I walk over this for you?
Yeah, sure.
Yeah. So refunds, and that's another thing I want to talk about. I think most sellers should shoot for around 4%. What do you have any targets?
Yeah, that would be on the upper side, but 4% is definitely in range.
Yeah, so 4% is in range. I think 2%, and maybe I'll talk about it more, why I think 2% is kind of the lowest you can get. That's relatively healthy, and that'll give you your kind of total income. Mm-hmm. Cost of goods sold, so that's everything you're paying to get your product from the supplier into Amazon. So that includes shipping, it includes tariffs, it includes product inserts. I used to say you could be up to 35%, but nowadays I think 18 to 30% is really what you need to shoot for. So that looks like if you sell $100 item, you should be paying $30 or less for that item.
Right.
Yeah. And then that's going to give you a gross profit margin, which I think nowadays you need at least 70%. I started around 62% a bunch of years ago. And with Amazon fees, I was fine. But nowadays that cost of goods sold, and I think we're in a unique position with kind of what China's economy, that you can negotiate relatively effectively with a lot of suppliers these days.
Right.
So then the referral fee, that's pretty standard across Amazon, 15%. Some categories is less. And FBA fees, this one is tough to change. Storage fees, and I think looking at an account level is less useful than looking at a product level, because there's your storage fees and then there's your individual product fees. But overall, trying to give Amazon less than 38, less than 35, 40% is what I think is what you have to do. And then advertising, that nowadays it seems like almost everyone is advertising. It is a function of both your ACOS and how much you're advertising. So if you're advertising a little less than half of your products and you have a 30% ACOS, that's going to give you a total ACOS. So that's 12% to generate the $100,000. That means you spent $11,000 to generate $96,000. So nowadays, 4 to 20%, ideally under 10. And though on a product level, I think it can vary depending. If you're a new product, then it's going to be like, might be a huge ACOS and tacos. What are you seeing for?
You know what? That's bang on. That's very, very similar to the numbers that I would be using.
Yeah, thank you. So, and after all this, you're going to have your inventory expense, all your Amazon fees, your advertising. That's going to leave you with a net, including PPC, or not quite net, of around 26%. And that's what you're going to have to play around with all your other fees. So that's your contractors, your insurance, your website hosting, and generally under 15% is ideal. And that should leave you with a profit around 10%. Though this fixed fee and this kind of example of $100,000, I think it's hard to get the fixed fees low. That as you start to scale up from like $10,000 a year to $100,000, you're kind of in a flux point that you're having the same fixed fees as someone who's selling maybe $500,000. So it's kind of hard to get this one down. And if you're on $100,000, I think you just need to get your income up, that you can have the same team up to a good number, scale it.
And what's even worse is when you try to cross the chasm, when you go from that mid-size to a larger, larger scale company, because there's so much new or so much technology that you have to add into your business model, that could just kill you at the beginning.
Yeah, it's kind of a bell curve that at first you're going to have large fixed fees. Then as you're in the middle, the fixed fees are going to be down as you're growing. But once you hit that large point, they're going to start rising again as you make all this new infrastructure.
Yeah. Yeah. Okay. And finally, the net profit. Let's see what we made.
11%.
All right.
So I think nowadays that's actually pretty good. A lot of sellers I'm talking to are in single digits, under 10%, which if you're making enough revenue, that's pretty tolerable for some people. But I think playing with the numbers and the ranges, you want to be 1 to positive to up to 15% is kind of the highest reasonable margin I see most people at.
Yeah, we had a guest on, I'm not sure, Kels, it was last podcast or last week, but they were saying that they weren't going to, if they needed at least a multiple of 7 times their COGS. That's what they were trying to. Wow. And yeah. So I was always preaching exactly what you were talking about here, like the exact same numbers for a multiple. And the other fella came on and he was saying, yeah, he's not even looking at it. If it's 6 times, he's leaving it alone.
Yeah. Wow.
So he's got to be very aggressive.
And so that's mainly the cost of goods sold. He's really trying to hammer that down. Yeah.
Yeah. So if he can do that, he's just saying that the amount of fees associated with Amazon when you consider PPC, referral, FBA is so high right now, over 50% for most of us, that yeah, he needed to have seven was the only way that he could make money.
Yeah. And I think in the past, I used to spend more time trying to work on the fixed fees. But nowadays, and like with being in a good position to negotiate with China, cost of goods sold, you have a really good chance of lowering that down, either negotiating your current manufacturer or ideally having a number of options that you can go to and potentially other countries.
Right. Okay. Let me see. Do I have another question? Yes, I do. I'd like to know how you can use your AI in your financial data to either spot good or bad trends.
Yeah, so that's something that we're working on building out. It is live right now, and I don't really see too many other programs doing it. And what we can do is we anonymize your data, and we're able to feed that kind of almost like a spreadsheet into ChatGPT, their API, the GPT-4, and we can ask it, are there any trends you see? So the main one we will do is, if you imagine like a spreadsheet of products on the horizontal axis and some sort of metric on the vertical by time. So imagine it's conversion rate over the last 12 months or profit margin in the last 12 months. And you can do this with your own filtering. In Excel, you can figure out what this is. But when you have a lot of SKUs, it's nice for a program like ChatGPT to run through these numbers and say, whoa, this SKU XYZ, its profit margin has decreased 40% in the last 6 months. So that's kind of a unique feature. And then we can pop that up to the user and kind of tell them, hey, maybe you should check this out. That is really just a starting point.
Okay. Birthday boy, where are you?
All right. So we do have some questions popping up here that we can jump into. The first one is more of a comment from Cool Hand, but I can 100% agree with a profitable sales versus high top line sales with little to no profit. My overall sales are currently lower than before, but they are actually profitable.
I'm in the same position this year versus last year.
All right. And then we had a couple questions about Cell Analytics. Do you also offer CPA service for filings?
At the moment, no, but we can help you find a CPA that can work for you.
Okay, great. I should also mention we do have a discount code for everyone. If they use code Beard Nation, you get 10% off, so you can check that out. And we have one more question here from Brian. Does it support multiple selling accounts on Amazon?
Do you mean, follow-up question for Brian, do you have like multiple marketplaces like US, Canada, or is it multiple accounts you want on one? And if it's multiple accounts you want on one, we can do that. Right now, for other countries, we can pull in some data, but we need to do a little bit of manual work for you. So it's all taken care of, but our main focus has been Amazon US for the automated data. But yeah, we can do multiple selling accounts if they're parallel.
Okay. It sounds like your company's in a nice spot right now because you're actually going on the sales calls, right? The 30-minute. So you haven't got to that point where other people are, coming on these calls. It's actually you handling them, which is great. Well, maybe this year at this time you won't be, but
yeah, last month was a little busier, but yeah, you can't get on a call with the CEO of QuickBooks.
Not right now. I did, by the way.
Oh, did you?
I did. Years ago, I put in a complaint about the high price of their payroll for small companies. And he called me back.
Wow.
And I couldn't believe it. And it got to the point where we were actually trying to become a partner with what I was doing. But he actually called me back and we had 2 or 3 calls together. It was fantastic.
That's awesome.
Yeah. So you never know. You never
It's
know. You put in a complaint, you might.
Yeah. Jeff at Amazon.com.
Well, yeah, I've done that a few times, but he had, for some reason, he's never called me back.
Keep trying. Yep.
But I do know, was it Steve Simonson? I know somebody that went to Amazon, and they were going into the elevator. He was coming out of the elevator with his son, and they kind of bumped into each other, and just a quick hi.
Wow.
Yeah, that would have been cool.
Yeah.
All right. So I think that's it. We have one last sponsor, but before we get to that and the wheel, Ryan, what's your contact information?
So you can find our website, Sell Analytics. That's SELLANALTIX, X at the end. Or find me on LinkedIn, Ryan Hurley, and happy to talk anything Amazon or accounting.
Very good. Okay, so now let's talk about Start, Scale, Exit, Repeat. And this is the book, Start, Scale, Exit, Repeat, from my buddy Colin Campbell. This book divides up an entrepreneur's journey from start, scale, exit, and repeat. It also breaks down that journey into subcategories such as story, people, money, and systems. And within that, there are subcategories to this. So what happens is if you're starting out on your journey, or if you're, let's say, on your way, or even an advanced entrepreneur, somebody who's had multiple businesses, this is a great book to go back, check out different references that Colin's put together, the different interviews that he talks about, some of his failures, some of his success stories, but he's done it right, and he's made it very easy for you to reference. So I like calling it a business reference guide. Colin doesn't like me saying it like that, but it's an awesome book about business. And you can find that on Amazon and on Audible. And I think some of the people here have read it, and they've pretty much said the same thing when I see them in the comments section. Okay, so let's go over to the wheel.
Okay, here we go. We are going to jump over to the wheel. Here we go.
It's time for the Wheel of Elsie.
All right, so thank you everyone for entering today's Wheel of Kelsey. I'm going to shuffle these up, and if you are the winner today, make sure you email me, kate@lunchwithnorm.com, so we can connect you with the prize. And it looks like it's Brian.
Brian. Congrats, Brian.
So Brian, if you could please email me, kate@lunchwithnorm.com. We'll connect you with your prize, and congratulations.
All right. Okay, so Brian, congrats on that. That's a great prize. And Brian, you'll have to let us know how you like the service too. It looks fantastic. So yeah, Ryan, congratulations on your app. It really looks, like I said, prior to coming on, I knew about the app, but I didn't know about the bookkeeping side of it. So that's so unique. So congratulations.
Yeah, thank you. Yeah, the bookkeeping is kind of really what I saw, the lack of the market, that there's a lot of analytics apps, but that to have the complete double ledger system it's just QuickBooks and Xero, really.
Right. By the way, this is something that you probably never done, but true double ledger. That's the way we used to do our books, right? Left side, right side.
Yeah.
So yeah. I don't think, I think you have to be older than 50 to remember those.
Yeah.
So, okay, that's it for today. Want more great information? Don't forget to subscribe by clicking here. Also, if you want to check out our latest podcasts, click over here.
Lunch with